Well, hello, and another Tuesday evening whizzes by. I can't believe how quickly the weeks are ticking by at the moment. I'm going to put the pre-show on just for a moment as we climb up towards 8 p.m. Hope everybody's well. Hope if those of you down in the south there are not too hot. Of course, it's been a record high in some of the outer lying areas of Victoria today, and I think it was pretty hot in Adelaide, and the heat's going to continue. So thoughts for those who are in heat or fire areas. But there's an important conversation to have today about the hotness in in the property market and what's causing it. And I'll tell a little story when the main show starts about the difficulty I had trying to get AI to represent what I wanted to represent with regard to housing. But more of that. The dogs are here, of course, as always. Hopefully it'll be quiet. It's bin day today, so they do sometimes make a bit of a noise, but we'll deal with that. And of course, here's the studio. Leith is teed up, ready to come in over there, and we're going to have a really interesting conversation. Leith's done some great work on slides, as always, and we get deep and dirty into sort of this stuff, so it'll be really interesting to have a conversation. Obviously, get your thoughts and inputs as we go in the chat there. Nice to see a number of people on already. Well, it's 8 p.m, so I'm going to take the pre-show off. I'm going to start the live show, and I'll be back in just a moment. Well, good evening and welcome to this live stream on the 27th of January, 2026. It's Martin North here from Digital Finance Analytics. Great to have you on this evening. Thanks for taking time out of your Tuesday in to spend it with us. Really appreciate it. And tonight we're going to have a really interesting conversation about property, the housing monster, and what can be done about it. And it is a very, very important topic for a lot of people, of course, and there's a lot of data that we're going to share this evening as part of that discussion. So it'll be fun, I think, but also hopefully make some important points as well. Before we get Leith to come in, we'll just highlight that we're not providing specific financial or legal advice. We moderate the chat, but do feel free to throw your questions, comments, suggestions as we go. And if you've got specific questions, if you use that Walk the World DFA, you can get that into my question queue and to make sure we see them. Also enabled super chat, so if you want to make a contribution to what we do around here, or indeed help support the channel, super chat's a way of doing it, as is Patreon or PayPal. Really appreciate those who support us. It really makes a huge, huge difference for what we do here. So it is greatly appreciated. Right, let me bring Leith straight in. Hi, Leith. Welcome back. How are you doing?
Yeah, good. Thanks, Martin. It's a bit hot down here, but yeah, as we're filming this, I'm filming this from my man cave in my home, which is like a separate detached garage sort of thing. And it doesn't have any air conditioning. I only really use it. It's a bit like a dungeon. So it's about 30 degrees in here. So if you see beads of sweat dripping off, that's why. But we will persevere.
Well, it represents the hot property market, doesn't it? Clearly it does. But no, well, I appreciate your coming on again. And there's so much to talk about. It's interesting, Leith. I called this the housing monster. And we're going to talk a little bit about what are the forces that have created this monster. But what's fascinating, I tried to get AI to create me a thumbnail sketch. What I wanted it to do was to replicate the Godzilla, type, big monster sort of storming across the property market with, crunching property all over the place. And the AI said, you can't do that. That's a too violent image. You're not allowed to create that. I tried a couple of different ones and I couldn't do it. So I always feel as though AI doesn't want to talk about the property market and the forces that are creating it. But we're going to do that this evening because let's face it, for many people, the problem of affordability and the pressures on households created by it are absolutely at the center of many people's life at the moment. And it seems to me that unfortunately our politicians and the policies that they've executed, the interest rate strategies that have been executed, the lack of supply, migration, population, all of these things are piling in on top. And we've got a perfect storm now in terms of the property market. And we might learn something from New Zealand and Canada where maybe things are a little bit different. So, trying to understand that this is a multifaceted problem, but it's created a monster.
Yeah, it has. And, let's be honest, for most people, so at least two-thirds of Australians, housing would be their biggest expense. So if you're paying off a mortgage, it's going to be most likely your biggest expense that you incur. Or if you're paying rent, it's most likely going to be the biggest expense that you incur. Of course, there's the lucky few who own the homes outright, but they're it's about a quarter of the population who own them outright. But for everyone else, housing is fundamental to their cost of living and ultimately their quality of life. And in Australia, we have totally butchered both sides of the equation. So whether purchase affordability, which is, obviously related to interest rates and the actual price of property and things like that. And then also rental affordability, which is how much of your weekly income or monthly income you have to spend just to put a rental property over your home, over your head. And both those measures are tracking at, in the case of purchase affordability, very close to the worst level in history. And in terms of rental affordability, at the worst level in history. And with the Reserve Bank of Australia looking increasingly likely to hike interest rates, well, that's obviously going to drive up purchase affordability and make that worse. And also, if you're already paying off a mortgage and you're on a variable rate mortgage, which is the overwhelming majority of Australians, it's going to push up their cost of living as well. So, look, none of this is a great story if you're someone that cares about housing affordability or you're impacted by these things.
And I think it's important to understand that, the drivers, because a lot of this is policy. It's been deliberately set. This isn't an accident. This isn't just something that is, beyond the forces of policy settings to address, but it is actually because of we'll see policy. I will just make the point that the 2-year bond rate is now up at 4.207, which is a correlation of where rates are expected to go according to markets. And you can see there that compared with last year when they were down at 3.4, this is a very, very significant change. And to my mind, this movement in the bond market, it doesn't give you the full answer, but it does give you a bit of an indication that the markets are now expecting the rates to go up from this point. Michelle Bullock, in her last briefing before Christmas, was, I think, signaling the end of cuts and probably maybe sideways, maybe up. The most recent employment data showed, significant strength. And we'll talk about some of those numbers in more detail because there's some really interesting insights there. And of course, now we've got the inflation data due out. Now, of course, they're messing around with the inflation metric and they're moving into this sort of new measure. And a few mentioned, but it looks like going up. So you've got higher inflation, higher interest rate expectations, more pressure, and the banks, of course, have lifted their fixed rates quite considerably already. In some cases, as much as 0.7% higher. So, yeah, it doesn't bode well, really.
No, and obviously, if the banks lift their fixed rates, they anticipate rate hikes by the RBA. And the latest market pricing is, as you've just shown, but the Australian Securities Exchange does basically the bond futures market pricing. And what that shows is that the market now expects 2 more rate hikes, roughly by this year, effectively. So, that would take the cash rate up to 4.1%, and just only 0.25 off its recent peak. So we obviously had 3 rate cuts last year, and that helped to put some stimulus into the housing market. And if you go by this pricing, well, then we're going to give 2 of those back. That's going to send mortgage rates back to close to 6% variable. And it's obviously going to squeeze those who've taken out recent mortgages. And I tell you, the people are going to be in the gun, Martin, not Michael. Martin, it's going to be the recent first home buyers who jumped onto this 5% deposit scheme, because obviously they've borrowed with, 95%. So they've borrowed 95%. They've taken on a ginormous mortgage. They've only got 5% down. And if the interest rates do rise, well, they're going to be smashed immediately. And if we do get a housing correction in the near term, the next year or so, well, a lot of those people could then be forced into negative equity because they've only got a thin equity buffer. And so, the Albanese government's obviously suckered tens of thousands of people in the first home buyers into the market with its 5% deposit scheme. Well, guess what? A lot of those people could soon be burnt if the Reserve Bank of Australia hikes rates. and squeezes them, because a lot of them would have just gotten in on skinny margins, and a lot of them are stretching themselves. And we've got to remember that the taxpayer is guaranteeing 15% of these people's mortgages, but that's protecting the banks. It doesn't protect those who are borrowing. If you've borrowed that money, you've still got to repay it, and you've got to service the debt. So this has been a massive sucker punch by the federal government, and it could already, it could very shortly come a cropper, because if the RBA hikes rates, it's going to smack them, smack them straight in the head, and they're going to be paying significantly more just to service their mortgages that they've only just taken out. So it's a pretty scary prospect for people, especially if you stretch yourself, and presumably if you take it out a 95% LVR mortgage, you have stretched yourself.
Well, you are also paying a higher interest rate as well. It's very interesting that if you look at the way the banks have actually done this, people are tending to be charged a higher rate to start with because of that lower capacity, for protection if rates drop, despite the government protection. So there's a bunch of stuff in there that suggests this is a problem. I think it shows you, I think, that government policy is part of the problem here. And there is this I call it the O'Neill doctrine, right? The O'Neill doctrine that prices will never go down. They'll go up sustainably. And I don't know whether you saw, but actually Trump, when he was talking at Davos last week, he actually said something rather similar. Well, we don't want prices to go down because, of course, a lot of people have property and benefit from the fact that prices have gone up. And it's like, well, yeah, always reminds me of the conversation I think last year about the fact that, of course, if you look at the full weight of numbers, there are more people with mortgages and with property than those who are trying to get in. So, of course, you're going to try and protect the bulk who actually want property prices to rise rather than the ones trying to get in. But I do really think that those people who almost got tricked into buying from October last year are they're really on the front edge of this. And things are moving now much more quickly than people expected in the wrong direction. Certainly in my one-to-one conversations, a number of people were expecting rate cuts and also were expecting real income growth, which is the other thing just to bear in mind, that real incomes really haven't recovered for many people, well, back since 2008. So there's a real pinch point here as well. It comes back to bad policy.
Oh, absolutely. It's bad policy. I mean, this has been deliberate policy of Australia, let's face it, since early 2000s. I think it could have even been the late 90s, but no, it was early 2000s. So when former Prime Minister John Howard, he was interviewed by Steve Austin on ABC Radio Brisbane. And I know this because I actually spoke to Steve Austin saying, John Howard back in the early 2000s was asked by a journalist, about rising house prices. And he said something along the lines of, well, I've never met a voter who doesn't like to see the house price go up. And as it turned out, I said that to Steve Austin in an interview with him, and he said, that was me. So, and then I went back and checked it. It was actually, I was interviewed by the guy who John Howard said it to back in the early 2000s. But let's be honest here, for the last, 20 odd years since then, that's been the playbook in Australia. And we saw it last election campaign where Claire O'Neill said that, a similar thing. And with previous politicians have said the same, whether it was, Turnbull and Joe Hockey and whatever, talking about negative gearing. And then also, opposition leader or former opposition leader Peter Dutton before last election, he just reiterated exactly the same as what Claire O'Neill said. So this has been the common theme in Australia and probably elsewhere as well, in most other countries except Canada, which has taken a different approach, and also New Zealand. But this has been a common theme, and it gets down to basic electoral math. I mean, Australia's home ownership rate, and that includes people obviously paying off mortgages who don't own the home. The bank owns the home more likely, but regardless, those who've got either a mortgage or own the home outright, it's about 2/3 of Australians. So 2/3 of Australians is always greater than 1/3 of renters. And so the government's always going to kowtow to the 2/3 over the 1/3. That's just electoral maths. And it's been that way for, nearly 25 years. And unfortunately, I mean, I can't see it really changing, but it sort of needs to change, because if we don't change, we're just going to keep blowing a bigger housing bubble, having more and more expensive housing, and ultimately it's going to come back on my children and eventually their children. And I've said this before, Martin, I'm actually happy. I live in Melbourne. I'm actually happy Melbourne stagnated for the last seven odd years. It's the one place in Australia that house prices basically gone sideways, and it's actually become more affordable. And I'm happy about that because I don't view this house that I live in as investment. It's just somewhere I live, and I plan to live here for a long time, even though I don't like Melbourne anymore. But I'm stuck here. But I do have children. I've got a soon to be 18-year-old and a 15-year-old, and they're going to need a house at some point in the next decade. And they're going to be coming to the bank of mum and dad because they'll have no choice. And if Melbourne home prices had followed, say, Brisbane and Adelaide and even Sydney, which hasn't grown as quickly as those markets, but if it had followed, say, Sydney in the last 5 years, well, then obviously the bank of mum and dad would have to dig deeper into their pockets to support our children. And that makes us worse off. So, look, this is really, unless you're a property investor, this is really having more expensive housing. Yes, it makes you look richer on paper, but it doesn't make you better off. And certainly, if you've got children, it makes you as a family unit worse off. So, Australia needs to get off this addiction. But unfortunately, everything our politicians do, it has the opposite impact. So, their affordability schemes are really demand pumping schemes, or first home or buyer incentive subsidy schemes to push, or as Steve Keen says, I think he calls the first home buyers grant the first home vendors grant, because the money just ends up flowing to the vendor. But, everything the government has touched in this area pretty much has been designed to effectively push home prices up. And what they call affordability is just sucking more people in the market by making it easier for them to take out loans, therefore adding to demand and pushing up prices. It's not fixing the structural issue, which is the cost of housing in Australia, whether you're buying or renting, is too expensive. And unless we bring down the structural cost of housing, housing's never going to become more affordable. But instead, we keep pushing up the structural cost of housing, both to buy and rent. Rent's more to immigration story. But, we keep doing policies that have the opposite. They're actually housing unaffordability policies. And the longer we do this, we're going to make housing more expensive, and we're also going to have a negative productivity impact on the economy, because we're going to keep sucking capital, financial capital, effort into housing rather than productive things. And ultimately, that is self-defeating from an economic perspective, from a social perspective, pretty much, from a living standards perspective, it's just negative almost across the board. And the only people who benefit from this are property investors who already own multiple properties, or obviously if you're in sort of the property industry and you're a developer, or well, it's not even a developer. Like if you're just a straight out developer, you don't necessarily benefit from this if the land cost goes up. But if you're like a landowner, I should say, they're the ones who benefit. But the vast majority of Australians don't benefit from these policies. Yet the government keeps dishing these policies out because nobody who's just taken out a mega mortgage wants to see the home price fall and potentially fall in negative equity. And we're also brainwashed into thinking that higher home prices equals greater wealth. Therefore, if my home goes up in value, I'm richer. When really you're not richer, because unless you're an investor and you just live in your home, it's just a roof over your head, right? If your home's worth double what it is now, it still serves the same purpose. And even if you were to sell it for double the price, well, presumably most other properties around the country have gone up by a similar amount, and you buy and sell in the same market, you just end up paying more stamp duty. So it's not actually making you better off. But all the wealth statistics that are put out by UBS and Credit Suisse and other outfits always show Australia to have one of the highest household wealths in the world, and that's because of our expensive property. And Cotality's latest chart pack for December gave a value of Australia's housing, which when you divide it by the population, values the average Australian dwelling. So they were talking apartments, full houses in the middle of nowhere, wherever. Like if you just take every single dwelling in Australia and you divide it by the population, it's worth 1,070,000. Well, that's an extraordinary amount of money. And that is why Australians are quoted as always being so rich, because we have this expensive housing, but it doesn't actually do anything for you. In fact, as I said, if you've got children, or you're worried about future generations, or you're worried about the balance of the economy, or the capital allocation of the economy. It actually makes us worse off. But it is what it is.
Yeah, and it's worth just highlighting, I think, that when you actually think about those wealth statistics that are produced, of course, the other forced issue in Australia is superannuation, right? Because people are actually also forced to accumulate funds in a savings account for retirement. So when you look at the international comparators, because of the superannuation pools, again, a government policy, as well as the housing values, a government policy, put them two together, and that explains why it is we've got these huge numbers on paper. But when you actually talk to real people, they don't feel wealthy. They don't feel that they've actually got plenty of latitude to do what they want to do. And, many households are really struggling with cash flow because they're having to put more and more into effectively servicing the rent or servicing the mortgage, depending on which way you're going. Now, there are some people, as you said earlier on, who have no mortgage now. But I do note, statistically speaking, the proportion of the population with no mortgage and no rent payments is dropping. So over time, we've actually got a situation where more and more people are either in debt to mortgage or in debt theoretically via rent. In other words, they have to pay. And if you go into retirement with rents, then you've got a real big problem. If you go into retirement with a property that's still got a mortgage, you've definitely got a problem. One of the reasons why perhaps people are working for longer than previously. And so you can begin to see how some of these policy levers are creating significant pressures on real people. Now, you mentioned also investors, and I think it's worth just highlighting here. I made a show the other day called The Inconvenient Truth About Property Investing in Australia. And the purpose of that show was to show that, sure, there are some people doing very well with property investments, but there are also a hell of a lot of people who've got property investments who are not making any returns at all, because on a cash flow basis, the costs of the property and servicing it and the mortgage, et cetera, is actually a lower level than the returns that they're actually getting overall. So in other words, you're making less because of the rents compared with the costs going out. And of course, they're expecting property price growth, but it's not necessarily always happening. So you mentioned Melbourne. There are pockets of Melbourne where property investors are going backwards. And so this whole property investing thing is a bit of a con as well. There's 10 billion plus of taxpayer support in the system, at least, probably more, through negative gearing and the other tax breaks. And so again, the government policy here, again, interfering with the property sector through the investment part of the story too, is another part of the problem. And I come back to this multi-headed rampaging monster. Well, the government has created the monster through its investment property strategies too.
Yeah, absolutely. I mean, obviously in 1999, the federal government changed the capital gains tax rules. So basically, and personally, I just think we should go back to the old system. Like the old system was fine. So the pre-1999 capital gains tax rules basically meant that you paid tax at your marginal tax rate on your full capital gain minus inflation. So if you held a property for 10 years, it went up by 50%, and inflation was 30%, you pay capital gains on 20%. It sort of made sense. It was just a very simple calculation, but instead they changed the rules to basically get rid of the inflation component and just basically have it so that if you hold a property for more than, or shares or anything, any asset for more than a year, you only pay half your marginal tax rate in capital gains tax. Now, that was just, as soon as I did that, it basically turbocharged, especially shorter term speculation, which means if you hold your property for less than 10 years, but you might even be more than that. It might be less than, say, 13 years, whatever it is. That was sort of the break-even point between the two regimes. But if you hold it for less than those periods, well, then you're ahead, and you can make property a bigger tax write-off than it was previously. It was just nonsensical why they did it, but that obviously, meant that if you're an investor, you can negatively gear your losses, which just basically means you can apply your negative returns on rents and your outgoings, etc., versus the rent you receive. Mortgage payments and all your outgoings versus the rent you receive. You can apply that against your taxable income, and then once you sell it, you actually don't pay the full capital gains tax. So it's sort of like a heads I win, tails you lose situation. And that obviously, boosted investor demand for property, and then we've also had obviously a whole bunch of other stupid demand side policies I mentioned before: first home buyers grants, 5% deposit schemes, shared equity schemes, you name it, a whole bunch of them that have just kept pouring more petrol on the demand bonfire. And then, of course, we've got the federal government turbocharging in massive amounts of people into Australia through immigration. So this century, according to the ABS population clock, which gives you like a daily rundown of what it estimates the population to be, if you calculate that from now versus the turn of the century, so when the new millennium ticked over, Australia's population has grown by 8.9 million people, and that's about 47%. So, that is ginormous population growth in a 26-year period, effectively. Yet, and obviously most of that growth come to the major capital cities. And that is one of the reasons why we have this chronic supply shortage of homes, of infrastructure, of water supplies, of basically schools, hospitals, the whole, you name it, because we're just growing everything so much faster than we can possibly absorb. And it's just creating this, constant demand problem, excess demand problem. So we've got excess structural population demand versus supply. We've got excess financial demand through all these various policies that the government's brought in, whether it's, halving the capital gains tax discount in combination with negative gearing, whether it's first home buyer grants, shared equity schemes, 5% deposit schemes, you name it. All these things are just adding more fuel on the housing bonfire, and it's making it more expensive to buy housing. But in terms of, because of the massive population growth relative to housing supply, it's also driven rents through the roof, which are now at the most expensive level in history. Rental payments are at the most expensive level in history versus incomes, according to Cotality. So it's also driven that side up as well. So, if you're a prospective first home buyer, this is diabolical, because if you're a first home buyer, you typically rent before you purchase, right? So if you're paying more to rent, it makes it harder to then save a deposit to then buy. And then the way the government's got around that is to say, oh, don't worry, you don't need a 20% deposit anymore. You only need a 5% deposit. We'll cover the rest. So then you got to take out a mega mortgage, right? So a much bigger mortgage than you would have otherwise, which then also the 5% deposit scheme also pushes upward pressure on home prices. Housing becomes more expensive than otherwise would have been, which means that if you're a first home buyer in a year, 1 year, 5 years, whatever, you're paying more to rent, and then you're paying more to buy because of all these policies. The 5% deposit scheme, et cetera, than you would have otherwise, which just means you've got to take out a bigger mortgage than you otherwise would have, and you got to spend more of your lifetime's earnings on repaying a mega mortgage. So you're stuffed if you stay in the rental market, because rents are growing faster than incomes, and you're stuffed if you got to take out one of these ginormous mega mortgages, because then you're stuck paying off a mega mortgage for decades, and it's going to suck more of your disposable income. So it's not great. I mean, obviously it's not great. Australia needs structurally lower housing costs, both to purchase and to rent. And ultimately, that's really the only solution to this. We've got to bring the cost of housing down, not try and band-aid over the top of it with policies that actually make the situation worse, even if they do suck more buyers into the market, at least in the short term. Because you're not solving the problem, you're just making the problem worse. But unfortunately, governments always take the easy option, and it gets back to what John Howard said, nearly 25 years ago, and what Clarion Hill said, and what Joe Hockey and I think Turnbull said, and what Peter Dutton said at the last election. Oh, we just want house prices to rise sustainably, effectively is what they said, which is an oxymoron. Like when home prices in Australia across the capital cities are already 8.8 times household incomes, which is the most expensive level in history. Well, then how can house prices rise sustainably? They've got to come down. When rents are already at the highest level in history against incomes, well, you don't want them, like, rents can't rise sustainably. They really need to fall if you're going to make housing more affordable, especially when we're in this sort of low income growth environment. Wage growth's tailed off, and certainly after inflation, wage growth is almost non-existent. So we've got to bring down the structural cost of housing, because we're not going to grow wages massively in excess of house prices and rents I mean, we could do that if we get a correction, but the way it's been running, all these things have been running a lot faster than wages, which is why it's become more expensive. So, really, we need to just bring the structural cost of housing down. That's the long and short of it. That's all we can do. And other jurisdictions across the world now are close neighbor New Zealand and also Canada have actually taken that approach, and it's been great.
Yes, and we might talk a bit more about New Zealand in a second, because New Zealand is a really interesting example of, well, if you turn the dials a different way, prices don't automatically continue to rise. But before we go there, just a couple of thoughts. One question, what are your thoughts on the next 12 to 18 months on the property market in Sydney? Can it still keep going? I think that's a good question, because, of course, the old question is, well, why does it keep going? Well, government policy is part of it, but are there limits? And there was also the other question, which is worth, I think, reflecting on. There are people talking about the 18.6 year cycle, and that'll be the end of 2026. And is that the secret thing? And Jolly Miller put this one up that you've both listened to Phil and Catherine around the 18.6 property cycle. Why is everyone so surprised that we're here and with 2026 will peak followed by a crash? So I don't know whether you've got a view on the 18.6 cycle, but it's been there in the background for some time. But we've got this massive question about how we get back to sustainable housing when the costs of building new homes is going through the roof, even now. And, as Logan says, well, if you look at the cost of bricks, well, even if you now we're importing bricks because we can't really build the bricks at home anymore, that's a problem. And the other costs of construction, can we do it with modular construction? I mean, there are questions. But the truth is that the basic input costs to new builds is suggesting that there is no possibility of new property prices falling.
Yeah, that's right. So I've got a few charts here actually from which they're basically the same ones I used, I think, in my December chart pack. And I probably should have updated the top left one on the dwelling construction pipeline, but it hasn't changed much. It's changed marginally. So, effectively, on the top right-hand side, we've got the residential construction costs have risen by about 40% since the pandemic. So the cost of actually building housing has gone up by about 40%. The middle charts show that the cost of land, so the land that if you're building a house or the lots that if you're building a house or apartment, those have rocketed as well. So they've gone up by about a third since the pandemic. So your land cost has gone up by a third. The building costs, so all the construction costs, have gone up by about 40%. That just means you can't build homes cheaply enough or quickly enough, because we don't have the actual labor to build it all to meet up to meet with this massive population supply. And in fact, as the left-hand side charts show, the top one's from Alex Joyner at IFM Investors, Australia's dwelling construction pipeline has rocketed massively in the last decade. So we've approved all these homes, but they're just sitting on the construction pile. We've got this huge pipeline, waiting for homes to be built. And just under that, from Cotality, it shows that the average time taken to build apartments, townhouses, houses has increased significantly over the last 5 years. And this is because, again, we just don't have the capacity to build homes quickly. And the bottom right-hand chart from Michael Matusik, it's about a year old now. It actually shows that the federal government has this fetish about blanketing Australia's cities in high-rise apartments because it reckons that's the easiest way to accommodate this mass population growth. But the problem with it is apartments are way more expensive to build than houses, as Michael Matusik's chart shows. Now that data is pulled from the ABS. And you can see that the cost of building townhouses and houses is way less than building apartments. So if costs are so high and they're sort of priced above where people can actually afford to pay, which is sort of the case, how does the government expect to magically meet its housing target of building 240,000 homes per year, which is about 9% higher, I think, than the highest level in history, which was 226,000 per year. And in fact, here we go. The bottom chart on the right-hand side plots the latest dwelling completions data from the ABS, which was just released last week. And it shows that Australia, last, I think this was last financial year, year to September, only built just under 175,000 homes. Now, that is, what's that, about 65,000 less than the Albanese government's housing target, which is shown in the red dashed line. So, we are nowhere near close. And at the same time as the government's doing this, it's still obviously running a very high immigration program. Now, the latest immigration data from the federal government showed that we had about 305,000 net overseas migrants arrive last financial year, so the 2024-25 financial year. Now, that's obviously immigration, not population growth. And, it's still running well above our ability to build housing. And the National Housing Supply and Affordability Council, which I mentioned last time, their latest forecast tipped that we'd have a shortage of 79,000 homes over the 5 years to, I think, 2029. Now, that's on top of about 200,000 to 300,000 existing shortage, according to Shane Oliver. So, even the federal government's own national advisor on housing supply and affordability doesn't believe that Australia can build enough homes. And the problem with it is Australia's immigration, according to Abel Rizvi, at least, who's a former immigration bureaucrat who writes about this stuff all the time. We don't always agree, but he forecasts that net overseas migration is going to average about 300,000 per year under current settings. Well, the National Housing Supply and Affordability Council used the Australian Treasury's forecast that tipped that net overseas migration will trend down to about 225,000. So, immigration is likely to run higher than its forecast. And what the National Housing Supply and Affordability Council showed, which is in the bottom left chart, is that if Australia's population grows 15% faster than what the National Housing Supply and Affordability Council considers its baseline, which is Treasury's forecast, which seems likely, then Australia's housing shortage is going to worsen by 200,000, not 79,000 over the 5 years. So this is just a diabolical situation, to cut a long story short. And, if it's all right with you, Martin, I might segue into the Centre for Population's latest forecast, if it's all right, because that plays beautifully into this whole thing.
Yeah, go for it. I mean, this is a fundamental question about population, isn't it?
Yeah, that's right. So just a quick bit of background. I've obviously alluded to it, but Australia, obviously, since the Albanese government was elected in mid-2022, it's just experienced its biggest migration surge in the nation's history. So net overseas migrations averaged 424,400 over the Albanese government's first full 3 years in office, which is the data that we have. And that equates to 1,162 net migrants landing every single day over Labor's first 3 years in office, and nearly 1.3 million net migrants in total over the 3-year period. Now, the top left chart plots the net daily arrivals under the first 3 years of the Albanese government against the former governments. Now, for the Abbott, Turnbull, Morrison government, only used from when they were elected in the fourth quarter of 2013 to the end of 2019, so excluded the pandemic border closure, because obviously immigration went negative, right? So we don't want to count that. But the average daily figure before the pandemic, so to the end of 2019, for the Abbott, Turnbull, Morrison government was 610 migrants per day. For the Rudd-Gillard government, which was the big Australia Rudd, we averaged 617 migrants per day under their term in government. Before that, Howard was 407. Now, obviously, Howard ramped it up towards the end of his term, but at the start, it was very low, or it's just, sustainable levels of immigration. And before that, the Hawke-Keating government, net overseas migration averaged 256 migrants per day. So, obviously, the trend has been up, especially in the last 20 years, because the Big Australia experiment took off really from 2005, introduced by Howard. But you can see that the numbers have just ratcheted higher, especially in the last 3 years, the Albanese government. Now, there's also this common claim that, it's catch-up migration. We're just catching up for the lost migrants during the pandemic. It's complete horse manure, because as the middle chart shows, we've actually overtaken the pre-pandemic trend. So since the end of 2019, which includes the pandemic border closure, so I'm talking the end of 2019 to mid last year, which is the latest data we've got, net overseas migrations averaged 266,000 per year. And that's 40,000 higher per annum than the 15 years of big Australia immigration before the pandemic. So from 2005 to the end of 2019, which is the big Australia period when immigration was ramped up. So we have actually experienced, stronger migration, even including the border closures, than we had previously, which is why immigration is now tracking above the pre-COVID trend, contrary to what the mainstream media and all these idiots want to tell you. And the final chart on the right is perhaps the most telling of all. Now, this comes from Alex Joyner at IFM Investors, and it's pretty amazing. It showed that in the year 2000, around about the time of the Sydney Olympics, it took 12 years. It had taken 12 years to add 1 million people to Australia's population via net overseas migration. But as of mid last year, which is the latest data that we've got, it had taken only 2.5 years to add 1 million to Australia's population. So Australia's immigration last financial year, which is the latest data that we got, was running at more than 4 times the level of what we had around about the time of the Sydney Olympics. So is there any wonder why we have these acute housing shortages and this endemic rental crisis? Because we've just grown the population so aggressively. As I said, since the turn of the century, we've added 8.9 million people to Australia's population, about 47% increase in just 26 years. This is extraordinary numbers. Now, to make matters worse, so you think that given that we've got this endemic housing shortage, infrastructure shortages, Australia's productivity stinks. And one of the reasons why its productivity stinks is because we've had capital dilution across the economy, because we've grown the population so much faster than business investment, than infrastructure, than housing. And as a result, we've had less productivity per person because we've just basically piled on. We've got congestion costs, and we've got workers have less tools and machinery and technology to work with because they've grown a lot faster than the capital stock. You'd think that the Australian Treasury might want to pull back, wouldn't you? But no. So the Centre for Population, which is run out of the Australian Treasury, they released their 2025 population statement earlier this month. And what it showed is that Australia's population is going to balloon by about 3.9 million people over the 11 years to 2035-36. And 80% of that growth is going to occur in the capital cities, right? And the capital cities are projected to grow by nearly 3.1 million people over the next 11 years. Now, over the 41-year period to 2065-66, the Centre for Population tips that Australia's population is going to grow by nearly 50% from its current level, which has already grown by, as I said, 47% since the turn of the century. We're going to add 13.4 million people, according to these projections, over that 41-year period, with 81% of this growth occurring in the capital cities. And Sydney is projected to expand to 8.5 million people by the mid-2060s, Melbourne to 9.1 million people. Perth and Brisbane also expected to experience very strong growth. I think Brisbane's about 4.8 million people is supposed to expand to after a 1.8 million increase. And guess what? As usual, the driver of this is going to be net overseas migration. Of course it is. So the Centre for Population forecast that net overseas migration over the 41-year period is going to average 235,000 a year. Now, yes, that's lower than the level since the start of the pandemic, which is 265,000, but it's still 9,000 above the level of net overseas migration in the 15 years of big Australia before the pandemic. So this immigration is going to remain structurally and historically high, according to the Centre for Population. And we often hear, Martin, like this is one of the big lies, is that we need high immigration because the regions are starved of people and they need more population. The regions are dying, blah blah blah. But the Centre for Population's own data shows that 81% of the growth in Australia's population is going to be in the capital cities over the 41 years. So capital cities are going to add nearly 10.9 million people in 41 years. And of the 235,000 net overseas migration that's forecast, 84% of this is going to be in the capital cities. So migrants are going to continue to pile into the capital cities, and they're not hardly any of them, only 16% of them are going to go to the regions. Now, the regions, according to this data, are only forecast to receive 38,100 net overseas migrants annually over 40 years, whereas the capital cities are forecast to receive 196,900 net overseas migrants over the 41-year period. So this is a complete farce. The whole notion that, we need immigration to boost the regions because the regions are dying is a farce, because they're not going to the regions. They're going to keep coming to the capital cities. Melbourne's going to expand to 9.1 million people, which is like another 3.6 or 3.7 million people in 41 years. Sydney's going to expand to 8.5 million, which is nearly 3 million over 41 years. Brisbane's going to add 1.8 million. Perth, similar, a little bit less, but very high growth, etc. The obvious question is, where's the housing going to come to accommodate all these people? Where's the infrastructure going to come from? Where's the water supply going to come from? Where's the energy going to come from? Where are the schools and hospitals and all these other things that we need to live productive lives and to have decent living standards? Where's this stuff going to come from? She can't grow the population by, nearly 50% in just over 40 years and expect there not to be massive problems. And what this basically tells you is that Australia's just going to have a never-ending housing shortage. If you think the last 25 years were bad, well, it's going to continue, because our major cities especially are just going to continue to grow like science experiments. And, what it basically also means that if you're, say, a resident of Sydney, well, you're facing a high-rise dog box future, because currently Sydney's housing composition is just over half detached houses, or roughly half detached houses. Well, according to the Urban Task Force, by the mid-2050s, Sydney's housing composition is supposed to be half high-rise shoebox apartments, 1/4 townhouses, and only 1/4 detached houses. So the entire structure of Sydney's housing composition is going to transform into high-rise dog boxes. So you're going to be paying more for your housing or to rent. So you're going to pay more to buy and more to rent, and you're going to live in a shoebox. Does this sound like an improvement in people's living standards? I don't think it does. And this is just madman stuff by the Australian government here. And it's one of the reasons why we've just got this perpetual housing crisis in Australia, because, as I said, we've experienced the fastest growth in the advanced world this century. Australia's population has grown by 8.9 million people, or about 47% since the turn of the century. So just think back to the Sydney Olympics, because anyone who's old enough can remember that, right? That's how many people have added since then. And almost, the overwhelming majority have come to the major capital cities. And as a result, we haven't built nearly enough stuff to cope with all these people, housing, infrastructure, the rest of it. And as a result, we've got perpetual housing shortages. I mean, none of this is rocket science, but you'd think an intelligent government, intelligent policymakers would look at this and go, you know what, we've really over-egged this and we should really pull back. Because I tell you, there's another country that's done it that is very, very similar to Australia, and that's Canada. Canada has done that exact thing because it was experiencing the exact same problems as Australia after the pandemic, when it had a massive upsurge in immigration. But their government, which is a left-leaning government, the Liberal Party in Canada is not the Liberal Party here. It's actually their Labor equivalent, and the Conservatives are the Liberal Party equivalent. Their government over there has implemented a population freeze, effectively. And for the first time in Canada's history, outside of the pandemic, Canada actually experienced a population decline. So, what Canada's done is effectively it ramped immigration massively after the pandemic, and that's shown in the chart on the left. It sent rents through the absolute roof to the moon, fastest rental growth in the nation's history, created a rental crisis, created all sorts of other problems, infrastructure and living, just a similar sort of stuff that Australia's got here. And their temporary migrant population, they call them non-permanent residents over there, increased to about 7.5% of the population. And the government said, you know what, we're going to, by the end of 2027, we're going to get that number down to 5%. And they've implemented really strict immigration caps, temporary visa rules, etc. Made it hard to get a student visa. They kicked people out that are marginal. They've also reduced the permanent migrant intake. So they were taking, I think it was about 600,000, or at one stage they plan to take 600,000. They've lowered that to below 400,000, so 360,000, I think it is, or thereabouts. And what it's done is actually it's worked. So Canada's net non-permanent resident or temporary migrant populations fallen to under 7%. So it's tracking, I think it was about 6.6%. It's scheduled to fall down to around 5%. And what that means is they're going to have this continued population outflow. And this big, sharp swing in population growth has led to 15 consecutive months, and that's shown on the charts on the right, the top and bottom one, 15 consecutive months of falling rents. So, and Canada's rents are now down by about 6.5% from their peak of a couple of years ago. So it's worked. So Canada recognised that they had massive problems, that they'd over-goosed immigration. And they said, you know what, we're going to actually stabilise the population. We're going to actually send immigration backwards for a few years, which they've done, or they're doing. And as a result, it's basically gotten rid of this structural shortage in the rental market. And it's actually sent rents lower, and rents are becoming more affordable. And, you know, prices have also been coming off for several years in Canada, not just because of the immigration thing, that's helped. They actually started falling before these policies. But Canada, unlike Australia, has deliberately made its housing market more affordable by reducing population growth, or basically stabilising population growth, or, you know, sending temporary migrants home and reducing immigration. But what's Australia doing? We don't do any of this. The Centre for Population forecasts that we're going to grow by, you know, nearly 3.9 million people over the next 11 years, with 3.1 million of those in the capital cities. So our government is forecasting ongoing turbocharged immigration, while Canada's has said no more, or at least none for several years, while infrastructure and housing catches up. And they're actually solving the problem. Now, this is a left-leaning government. Canada is a similar economy to Australia. It's got a Westminster political system. You know, upper house, lower house, very similar to the UK, Australia. We've got basically the same political systems. Similar political system, similar economic structure as close as you can be. It's a major commodity exporter, etc. Similar composition in that most of Australia's population is hugging the east coast, whereas most of Canada's population, almost all of it, is hugging the southern border, right? So we've got, you know, Canada's got a few very large cities and you know, very capital city centric, just like Australia. Similar oligopolistic banking system. You know, there's a lot of similarities here, but Canada's government has recognised the problem, and it's decided to take action, and housing is becoming cheaper to both purchase and rent. Whereas the Australian government throws petrol on the house price bonfire through its 5% deposit scheme and all the other stuff, and its stupid tax policies, etc., and then drives up rents through by running excessive population growth, which is projected to continue indefinitely for the rest of our lifetimes. And you wonder why we've got problems. And it's not just Canada, Martin. If you don't mind, I'll just go on quickly about New Zealand, if it's okay. Because New Zealand's is a bit more accidental than Canada. So they haven't directly implemented, you know, policies to cut immigration as much as Canada did. But New Zealand's net overseas migration has fallen to about 10,000 annually. Now, that's, to put that into perspective, that's a chart on the left there. Just look at the black section there. New Zealand's net overseas migration averaged 40,000 over the last decade. It's currently tracking at about 10,000. And during the peak, post-pandemic, it rose to about 130,000. So it's tracking at 10,000 now versus 130,000 a couple of years ago. This massive decline in immigration and population growth has, of course, sent rents plummeting. So the middle chart there's that's rental bond data, as you can see, tanked. The top right chart from Justin Farber at Antipodi Macro shows advertised rents and CPI rents, as you can see, tanked. Growth tanked there. And the bottom right chart there from Justin Farbo shows dwelling construction versus population growth. Well, now housing supply is running way ahead of demand via population growth because this crash in immigration. The data is clear for both New Zealand and Canada. If you slash immigration, you then lower rents because it's a supply-demand equation here. So why aren't we doing that? We've got a rental crisis, the worst in modern history, whereby Australian households are being forced to spend a record share of their income on rents. And to make matters worse, the rental market is actually sorry, I've just stuffed up the presentation there. That the rental market in Australia is actually reaccelerating. So, this is a massive problem we've got here. Australia's policymakers deliberately chosen to juice the housing market. Canada and New Zealand have taken the other opposite path. And as a result, our housing's less affordable, and Canada's and New Zealand's is becoming more affordable. None of this is rocket science.
No, it is, unfortunately, when you stand back and just tell the story as you've told it, you can see that the strategic intent of the government over 20, 30, 40 years has been to take us to this cul-de-sac. Now, obviously, there are beneficiaries. The banks are benefiting because they're actually able to borrow, provide more borrowing, and that means that their balance sheets grow and they can make more profit. They've extended the terms of loans so that people are now paying more interest over a longer period of time. So there are huge cash flows back to the banks. So the banks are benefiting. You could also, I guess, argue that the GDP number is propped up by the very significant inflows of migrants. And of course, the Treasury is very much steered by keeping the GDP into a particular positive zone, even if it's only slightly positive, it is now. But the consequence for ordinary people is that they're actually having to spend more and more on just trying to find somewhere to live. Their quality of life is being degraded. There's more stuff on the streets. There's less access to services because there are more people, all of those things that follow from it. And there is no real sense of the broader impacts of their policies on the psyche of people, on the the confidence of people. I've noticed that the financial confidence is pretty low at the moment, and consumer confidence is pretty low at the moment because of all of these things. So we've got a government that is effectively putting in place and has put in place a series of policies that myopically seem to be focused on a few things, but not necessarily the right things. And, somebody asked earlier on in the chat, I didn't put the chat up because it wasn't appropriate at the time, but, how do you actually deal with this? Because, if you actually say we need more sustainable house prices, that effectively means eroding that theoretical value that people have in that paper profit that many people have made in their properties. But if you look at New Zealand, where they've done that, prices are down, 19% from their peaks, I think, in New Zealand now?
Yes. So in real terms, so if you want to adjust for inflation, New Zealand's are actually down by over 30%. They're actually tracking at about 2019 levels. I've just got a few charts here, actually. Yeah. So the right-hand side's the New Zealand House Price Index by the Reserve Real Estate Institute New Zealand, which is the leading indicator. That's their hedonic index. It's the main one that everyone uses. And that chart, I'll give it a shout out. That's Justin Farbo, Affordability and Macro has done that. And house prices are down to sort of 2019 levels. And the middle chart there is actually Canada. And you can see it followed a similar movement. So Canada's are also down incredibly heavily once you adjust for inflation, especially. So Canada and New Zealand have both experienced, hefty house price corrections, which is good. So housing's become more affordable. And in fact, Louis Christopher posted on Twitter last week, X, I should say, that apparently there's quite a big housing correction going on in London. So that article which I read, it was talking more about the apartment market, but they're saying that that apartments in London have fallen by up to 30%. So what this tells you, though, is that, look, property is not infallible. Housing markets don't always go up. I mean, Canada experienced a ginormous run up in house prices similar to Australia's, and look, it's come a cropper. Similar to New Zealand, and that Canadian New Zealand chart actually looks incredibly similar, doesn't it? If you look at the shape of it over time, very similar. But my question has been, if at some point gravity could very well catch up to Australian house prices, we could, and we really should, experience a similar type of correction, at least in inflation adjusted terms, to what Canada and New Zealand have experienced, because those are arguably the two most similar economies in the world to Australia. And if it can happen there, it can happen here. But obviously the big difference is those two countries have experienced significantly lower, much different immigration situations. Canada's obviously been smashed by the Trump tariffs and that sort of thing. which we have been impacted by, et cetera, et cetera. New Zealand's had a very deep recession, not just per capita, but also headline recession. But either way, at some point, if we have some sort of accident, whether it's, commodity prices or whatever, something will catch up with Australia eventually. And we're very likely to have some sort of correction that's deep. And the people I fear for is those first home buyers, for example, who've just bought on a 5% deposit, leveraged to the hilt, are stuck paying mortgages that they might be struggling to afford, and then they plunge in negative equity, and that's always a scary prospect. If they need to sell, well, then they're going to be negative equity, and what do you do then? So, yeah, it's not great that the federal government is obviously juicing values up higher and also rents, but then also sucking people into the market who are vulnerable with very thin deposits, obviously in that bid to drive house prices higher and to keep the whole thing inflated. But really what I wish we did was we just sort of let it deflate of its own accord, stop trying to stimulate the market, and also cut immigration like Canada has, because it's been running it's too strong for too long. We haven't built enough houses to keep up. We need housing, we need infrastructure, we need energy supplies, we need water supplies, everything to catch up, because we can't keep running ahead of all those things, which is what we've done really for 20 odd years. And if we keep doing that, well, then just going to dig a bigger hole for ourselves, and we're going to have a less productive economy as well, because this capital dilution problem we've got. And obviously structurally more expensive housing, both to purchase and rent. And this isn't the sort of economy we should be aiming for, ultimately. And it's not fair from an intergenerational perspective. And it's a massive retrograde step for the society. But unfortunately, here we are. Our policymakers keep doing dumb things, when all we have to do now, especially with housing, is just look at Canada. I argue Canada is even more similar than New Zealand is in terms of an economy, the way it's structured. And, again, Westminster political system, left-leaning Labor-like government, has done this stuff. Well, why can't our left-leaning Labor government do a similar sort of thing? Do it for the good of the country. And the immigration cuts have been massively popular in Canada, and they'd be massively popular here too, because virtually every single opinion poll held over the past 15 years has showed that Australians support significantly lower immigration. So just give us what we want and fix the housing market while you're doing it. And, fix the infrastructure deficit. Let all the supply side of the economy catch up to this massive population growth that we've already had. Stop adding more and more population growth to it, so we always fall further and further behind. Because that's effectively what our government does.
Yeah, and it's worth saying, I think, that whenever we start talking about, turning the dials back on migration because of these economic reasons, then people will chuck us oh, you're being racist or whatever, right? Or under the new hate speech, can we even say this stuff now, right? So it's an interesting question. But the point is that these were policy decisions taken, and they're now playing out as expected. There's no surprise here. There is no shock. There should be no shock that we are where we are, because it's logical when you actually put all the pieces together. And it's interesting because, of course, I've been talking about this pressure on households for a good few years, and suggesting that if, in fact, we moved the dials back so we got to 3 times income rather than 8 times income, well, naturally, prices would fall. And in fact, prices are about 50 to 60% above the long-term natural run where they should be, based on all of the other ratios. The thing that's actually kept them high are these government policies, and that includes the migration and the stimulation for first-time buyers and the investors and all of the other stuff that is in there. All of that stuff has propped property prices high, but the consequences now are really coming home to roost. And then just to sort of add a little bit of extra piquance to the conversation, you mentioned energy. Now, energy in Australia is massively another problem. So if I look at the surveys, I see housing costs, big problem. Energy costs, big problem. And of course, we've now got the expectation that energy prices will continue to rise, partly because of the stupid policies that are still rolled out. And we can talk a little bit perhaps about the policies that were actually announced recently with regard to energy and how perhaps they're not that powerful, but also AI and the demand for data center energy. And of course, if you're thinking about the flows ahead, the truth is data center companies and AI companies can afford to spend a lot more on their energy relative to households. So who's going to pick up the bill? Well, it's going to be ordinary households are going to have to pay even more for their energy.
Yeah, Australia's energy situation is just diabolical when you think about it. So I've already mentioned the population growth thing. So obviously, Australia's population is forecast to grow by nearly 50% over the next 41 years. So we're going to add, 13.4 million people over that period. Obviously, if you grow the population by nearly 50%, household electricity demand is going to grow by nearly 50%. That's just, it's not rocket science, right? And then obviously you need all the industry and everything to go around to support that high population as well. But, obviously your demand's going to grow, right? That's incontrovertible, unless we're all going to suddenly magically halve our energy use, which is just not realistic, let's be honest, especially in this digital world we're living where everything is just powered by electricity. Now, under the Albanese government's renewable energy target, so 82% renewable energy target, which has been set by 2030, we're supposed to basically shut down most of our coal-fired generation, right? The problem with it is, well, there's a lot of problems with it. For starters, as I said, the demand's increasing from population growth, but demand's also increasing because of these data centers, which the government never thought about when it set these ridiculous targets. Now, Australia is actually one of the biggest countries in the world for data centers. And that they've got a chart there, top left from CBA, which actually shows that Australia is second after the US, similar, just above Japan, of data center investment. And the middle chart there from CBA shows the massive increase in work to be done and starts on data centers, et cetera, et cetera. Now, so we've got dozens of data centers that are planned to be built across Australia, and that's driven by AI, cloud demand, hyperscale investment, et cetera. And in 2024-25, data centers were estimated to consume 4 terawatt hours of electricity. So that was about 2.2% of the national energy markets. That's all the East Coast, basically Australia minus WA. Energy consumption. Now, 2.2% is not that much, but that demand is forecast to rise to, I think it's 12 terawatt hours, right, by mid-century, because that's going to take up a much higher share of Australia's energy consumption. Now, so that's the demand side. Demand increasing via population growth, demand increasing via these data centers, et cetera, which also require heaps of water, I might add as well. We've got water problems too in Australia. So, that doesn't work either. At the same time, in order to basically meet Labor's 82% renewable energy target, if we're going to shut down our coal-fired generators, we're going to need to build 6 to 7 gigawatts of new large-scale renewable energy. So that's, wind and solar, and also backed up by batteries, et cetera, every single year by 2030. Now, 1 gigawatt of power, if it runs consistently, so if it can run 24/7, that's enough to power roughly 1 million homes. Not quite, but thereabouts. That gives you an idea of the scale. Now you might think, well, hang on, that doesn't make sense. Like, why do you need to add that much? It's because renewables are intermittent, right? They don't give you what they say they're going to give you, because the sun only shines a set number of hours per day. It doesn't shine properly if it's obviously cloudy, etc. Wind only works when it decides to work. Now, the problem with it is that our supply of these renewable energies are running so far below the 6 to 7 gigawatt run rate that supply is just not increasing nearly fast enough. So last calendar year, large-scale wind and solar investment fell to just 2 gigawatts for the year. That's new investment. And it was 4.3 in 2024. So it's roughly halved from its level in 2024. Now, that's obviously far less than 6 to 7 gigawatts a year. And there's a reason why investors are no longer reluctant to invest in this stuff, because they don't want to basically invest into something like solar, which is already massively oversupplied in the middle of the day, where wholesale costs are practically zero while the sun shines because we've got so much of the damn stuff. They don't invest in that environment because it's not going to be profitable for them, right? Now, there is the capacity investment scheme, which the government basically sets a base price. So taxpayers have to give them a set amount, right? But there is no, my understanding is that there's no mechanism for curtailment, unlike the UK. So in the UK, they've got a capacity investment scheme type system, whereby if you're a wind generator or a solar generator, you get paid even if they don't use your energy, right? So you get a guaranteed price if they take it, and if they don't take it, you still get paid, right? It's called curtailment. So if there's too much energy in the system and they shut down your wind farm, or they don't take the power from your wind farm, you still get paid for that. In Australia, there is no curtailment mechanism. So nobody wants to invest in this stuff, or less people want to invest in it because they're worried that if they invest in a large-scale project, then someone builds another one of these projects, they're just going to cut their lunch. And then they'll get curtailed and they won't make any money, right? So, but the bottom line is the notion that we can massively increase demand, so population growth by nearly 50%, build all these data centers, shut down our coal, which is basically the only thing that provides us with stable near 24/7 power, which is not dependent on the weather, and that we can magically have cheap electricity, have enough electricity, and then meet net zero while we're growing demand. None of it adds up, right? So how do Australia's policymakers genuinely think that they can shut down baseload generation and achieve net zero without causing massive energy scarcity across the country? Because again, demand's going to explode, population growth, data centers, and without creating widespread economic damage and social carnage, because it just doesn't work. Demand's going to rise heaps, so we need more supply, right? And what you definitely don't want to do is shut down your stable supply that isn't reliant on the weather, i.e. coal, for supplies that are not being built to nearly enough to what we need anyway, but are also intermittent and weather dependent. Because if we do that, we're going to have every time in winter where you have a Duncanflouter, which is basically where you have very low wind and solar's crap because it's cloudy, especially down south where I live in Melbourne. Where the hell do you get your energy from? None of this works. So that's the first problem with Australia's energy situation. We're basically facing the Hunger Games, right? And it's all self-inflicted because Australia is the biggest coal exporter in the world and the second biggest gas exporter. So we've got all the energy we need if we wanted to actually use it, right? But we decided we can't use it while we sell the same stuff to the rest of the world. I've said this before, we export like 7 or 8 times as much coal to the rest of the world than we use ourselves. And we export 4 times more gas than we use ourselves once you account for the gas lost in liquefaction process. Why don't we just use a little bit more of it ourselves and export less? The world's climate would be no worse off. Like, it still gets burnt. Whether it gets burnt here or it gets burnt in China makes no difference. But we could give ourselves cheap and reliable power. But we've decided, no, we can't do that. But we're still happy to sell the stuff at massive, orders of magnitude more than we use ourselves to someone else to burn. Just, to me, it just makes no sense. And the second problem is, just before Christmas, and the week before Christmas, the Albanese government unveiled their absolutely pathetic, wet lettuce and useless East Coast gas reservation policy, which is going to do absolutely nothing to solve the East Coast gas crisis. Now, I've mentioned this previously. East Coast Australia exports about 3/4 of its gas, right? Most of that, overwhelming majority of East Coast gas goes to China, right? So, we export about 4 times more gas than we use ourselves. Well, not quite 4 times, but they're thereabouts. And East Coast Australia was or still is, until this comes into place, the only exporting jurisdiction in the world that has no requirement to reserve gas for domestic use before we sell it overseas. So as a result, the gas cartel, which is a collection of a handful of companies that control 90% of East Coast gas, it just got us over a barrel, right? And they've driven up our gas costs. They've created an artificial shortage on the East Coast while they sell it overseas to China and other places. Now, the Albanese government, under pressure, announced their East Coast gas reservation policy, which has zero retrospectivity, which doesn't apply at all to existing gas reserves or contracts. And all they've promised is that up to between 15 and 25% of new projects that come online from 2027 Any 15 to 25% of gas from new gas projects that come online from 2027 will be reserved for domestic use. The problem with it is it's going to take years to build any gas projects, right? So it's going to do nothing in the short to medium term. And the only time they're actually going to get any relief for supply and prices is after 2030. This is the chart on the left, when our gas contracts, existing gas contracts, start to roll off, right? So from about 2030, the existing gas contracts with China, etc., they start to expire. And only then, when new contracts are undertaken, is this 15 to 25% reservation requirement actually going to take effect. And only then will it actually add meaningfully to supply and hopefully bring down prices, right? So we're looking at a 5-year period where gas prices on the East Coast are going to continue to be determined by the international price. And in fact, the CBA, and this is the chart on the right-hand side, they think that import terminals are going to come into place, and Australia's domestic gas price, which is already exorbitant, is going to rise from basically being the export price minus the cost of liquefying it and transport, which is the current price, to being the import parity price. So effectively the cost of shipping in from overseas on a liquefied natural gas tanker and then degasifying it. And as you can see in that chart there, according to CBA, from March 2028, the gas price is going to rocket once these LNG terminals come on board. Now, it does believe that by 2030, the prices will come back down, but they're still going to be expensive. And they're going to come back down once these gas contracts roll off again. And it also depends on, to some extent what happens. There are some thoughts that the world could face an LNG glut. And if that's the case, the global price of LNG should come down, which should give us some relief. But that's going to be from good luck rather than good management. We should really be in control of our own gas destiny here. And at a minimum, all Labor should have done is kept its existing gas reservation policy, but also implemented the coalition's policy from the election. So what the coalition wanted to do, it basically wanted to introduce export levies on uncontracted gas that is exported overseas. Now, as you can see in that chart on the left, the uncontracted gas is the blue stuff. So a significant amount of gas is actually exported overseas that isn't under any of these contracts. So there is no sovereign risk, right? Peter Dutton, or the coalition for the election, wanted to make sure that gas in the blue was diverted to the domestic market to increase supplies rather than getting sold overseas. And that policy, that simple policy, would have increased domestic supplies immediately. It also, if the companies decided to export this gas, the Australian Treasury would have received revenue via the export levy, which then could have been recycled into bill relief, but it wouldn't be paid for via our taxes. It'd be paid for by the gas cartel. So we could have got relief that way. So it would have helped the budget, or would have helped us through energy bill subsidies not paid for by us. Like at the moment they're paid for by personal income taxes, etc. And the coalition also promised to spend $1 billion expanding the north-south pipeline between Queensland and Victoria, because one of the problems we've got is Victorian gas is starting to run low. And in the middle of winter, Victoria takes gas from up north, but that pipeline just for a couple of months a year operates at capacity. You want to expand those facilities so that gas could be more freely sent south to Victoria in wintertime when it needs it. So the coalition had an eminently sensible gas reservation policy that actually would have made a difference, right? But Labor jettisoned it. They called it a thought bubble, and instead has come up with this absolute wet lettuce gas reservation policy that has zero retrospectivity, doesn't apply to spot gas currently, and only applies to new gas projects from a future date, which will take years to be built anyway. So effectively, as I said, under Labor's policy, we're probably not going to get any relief for 5 years until the existing contracts start to roll off and, we start getting that 15 to 25% gas reservation on the new contracts that then come afterwards. But this is diabolical policy by Labor, and all it means is, and I've said this before, if the gas price goes up, as it looks like it will from this CBA chart, it's also going to add to wholesale electricity costs, because gas is one of the key marginal price setters in the wholesale electricity market. Now, not total system costs, because that's also transmission costs and all the other stuff. But the generation cost, gas is one of the key price setters. So if we have more expensive gas, we also have more expensive wholesale electricity, which then feeds into power bills, etc. So Labor has just put us over a complete barrel here on energy, right? They've got their stupid 82% renewable energy target, which is totally unrealistic at the same time as demand's going to rocket through data centers and population growth, etc. So we're going to shut down a baseload coal, which is one of the only reliable and cheap things that can run independent of the weather. And by doing that, it makes you more reliant on gas, because gas is used for firming when renewables, it can be turned on and off very quickly. And when the wind stops blowing or the sun stops shining and you need to provide some quick power, gas is the input usually. But they're then going to make that more expensive as well. So the upshot is that Australia is on absolute hiding to nothing here. We're going to face ever rising energy costs, both gas and electricity. So if you're a manufacturer, the manufacturers are very heavily reliant on gas as well as electricity, but gas directly for blast furnaces and that sort of thing. Well, obviously, the gas price goes up. We're going to shrink our manufacturing sector even more than we already have. We've already got the smallest manufacturing sector in the OECD, about 5% of the economy. We're going to see more closures because we've got expensive energy when we sell 4 times more gas than we use. This makes no sense. And then we're going to shut down our baseload coal, which, despite the fact that we export 7 to 8 times more coal to the rest of the world than we use. Like, where is the logic in this stuff? Like, I know we want to be net zero heroes here, and we want to say to the world, look, we're cutting our carbon emissions and that. But the fact of the matter is, we're going to cut our carbon emissions because we're going to shut down all our industry. Similar to what the UK has done, where you live, Martin. I mean, you obviously know all about that. What's happened there, but it's not very sensible, because ultimately, if we want to have good, high living standards and a productive economy and a balanced economy and a diversified economy, we need reliable and low cost energy. And Australia should have reliable and low cost energy because we have everything the world needs with respect to energy other than oil. So we've got oodles of coal, oodles of gas, nearly 1/3 of the world's uranium, if you wanted to go nuclear. We've got everything. So why don't we have super cheap energy? Because of policy failure and because of idiotic policies like this. And we're just basically shooting ourselves in the foot, and we're going to commit energy suicide and economic suicide for what? Like, to me, it just makes no sense. And it's another reason why we're governed by clowns in Australia. And it's another, and let's also remember that high energy costs also feed into housing costs and construction costs, because guess what? If you need bricks for your house, and bricks are made by brickworks in Australia, and brickworks needs gas for its blast furnaces to make bricks, and that gas is uber expensive, well, the cost of bricks goes up. And therefore, the cost of building your house goes up. And you can do that right across the supply chain. I mean, energy is an everything problem because it feeds into all areas of the supply chain across all types of industries. So if you make energy more expensive, not only does it push up your household power bills, so the bill you pay at home, it pushes up the cost of everything, because everything needs energy to some extent. And obviously manufacturers need it more than everything else. And if we make that expensive, we're going to downsize the manufacturing even more than we already have. And we're going to become even more reliant on imports. And that makes you structurally less secure as an economy, because if you ever have a future war or whatever, we're going to have no manufacturing capacity here. We're not going to be able to defend ourselves. Like, this is just moronic stuff, all in the name of net zero and trying to, look like you're doing something. It's kind of a bit like the housing situation. You implement these dumb affordability policies to say that so that you can say that you're doing something about affordability. Well, we're doing the same thing with to try and boast to the rest of the world. We go to Davos, whatever, that, oh, look, Australia's doing their bit, when we sell 7 or 8 times more coal to the rest of the world to burn instead of ourselves, and 4 times more gas. I mean, why not just use a bit more of it ourselves? Basically copy China's playbook. China is doing more of everything. Like, they're doing the renewable stuff, but they're also building more coal and more nuclear and everything. China's basically said we need as much energy as we can get at the lowest cost as quickly as possible. Right? So they're just doing more of everything. And that's why China's going to end up winning on this sort of stuff, because they don't care. They just want more energy. Australia should be doing the same. Yeah, we can do the rooftop solar and all that stuff if you want, but we should also be expanding our baseload power supplies as well, whether that's coal or nuclear or whatever. We need more energy. Simple as that, especially if we're going to grow the population by 50%, and especially if we're going to build up these data centers, because demand's going to rocket, so you need supply to match that. So you don't match that by cutting down your baseload supply and cutting off at the knees and shutting it down. Because you do that, we're going to have a problem. And, all it means is we're going to have energy scarcity and rocketing energy costs. It's as simple as that. And we're going to have a deindustrialized manufacturing sector, or even more deindustrialized, less diversified economy, and a less productive economy. It's as simple as that. It's just lunacy.
Yeah, it is. And I just want to emphasize one other angle on the lunacy. The Treasurer, of course, actually brought in these energy subsidies before the election, which actually magically managed to squeeze the inflation rate down for a few months. But now that's finished. As a result of that, the inflation rate's now upticking again and will stay high for a period because of the fact he just shifted the problem, didn't solve the problem. So effectively, he used taxpayers' money to fool the electorate into thinking inflation was low when it wasn't. And now it's going to go higher, which is going to put higher interest rates on the table, which means effectively more people are going to get squeezed again, one, from higher energy, but two, also because those interest rates are now going to be higher, which is going to hit mortgage holders and indirectly renters as well. Yes, another example of silly policy, or policy frankly done predominantly to try and actually win the election rather than actually nation building and all those things. And that's what I want to come to, Leith, because when you think back about what these things that we've been talking about tonight, most of these things are done for short-term tactical benefit of the incumbent party rather than actually for nation building for the long term. And to my mind, if we really want to get this sorted out, we need to have a different lens through which we make policy decisions, because there are alternative policies that could be done. Australia's very well positioned with all of the energy that it has at its disposal if it chose to use it in a particular way. Australia has capacity to build quite a lot of property. We're building quite a lot of property relative to many other countries per capita, but we're swamping it because of the high migration. And actually, allowing property prices to settle like New Zealand and Canada would be good. It would be actually positive for the long-term future of the country. So there are policies that are potentially possible, but the political processes, the machinery of government, seems to be having an agenda which is completely different from what that should be for long-term prosperity.
Yeah, it's absolute can-kick economics, always. It's always the sugar hit over the, it's like if you go to the gym and you just go and take some sort of stimulant before you work out, whatever. And it might work a little bit for a little while, but it doesn't beat a good diet. And, all those other things you need to get fitter and build muscle, etc. Like ultimately that Australia has an economy that is built around the sugar hit. Right. And it doesn't work. Like, you can get a little bit of a kick for a couple quarters, whatever, but structurally it makes you worse off. And but because we've been doing this for 25 years, we've just become this productivity sinkhole economy whereby the sugar hits sort of stop working like they used to, because you've done it so much. We've basically become insulin resistant, right? As an economy, we keep piling in all this extra sugar, but we've become insulin resistant. So the extra sugar the glucose isn't being taken up by us anymore. And it's not working to the same degree as it was previously. And then we've just become this obese, lazy, low productive economy in the interim. Right. So the number one solution is to stop doing dumb things. I think you've just pretty much explained it well. Like, slow the migration intake down dramatically. Make it focused on genuine skills that the economy actually needs. So highly skilled people rather than just a quantity-based system. So quality-based system over quantity-based system. Right? So do that. We should be emulating China on energy, right? Just trying to get more of it from everywhere. So do everything. Right. So we should be putting energy security and cost above all other metrics when it comes to energy. Right. So that's what we should be focusing on there. There's obviously all the tax reforms and things like that. Like stop doing dumb things and broaden out the tax base and make it more focused on stimulating genuine productive effort or rewarding genuine productive effort, right? Rather than speculation. There's a whole bunch of things Australia should be doing, but unfortunately, we just don't do any of it.
Mm.
And the government's solution to everything is, we don't want to talk about it, so let's try and put in a whole bunch of censorship and hate speech laws to actually stop people being able to talk about it, to actually shine a light on this stuff. And, you in the UK and us in Australia, we seem to be following your approach on this, on the UK's approach on this, because I do wonder, Martin, I am a little bit concerned by these sorts of laws that are coming in, because at some point, am I going to get a knock at my door going, oh, you said this about whatever, whatever, and get charged for something for saying the wrong thing. At the same time, while I'm living in Melbourne, there's literally people doing home invasions every day and they don't get locked up. Like, it's just, we live in a clown show upside down world here in Australia in a whole lot of different ways. And we could be, we should be a great country. We've got such an abundance of riches that most other countries in the world would die for. But we are so, I don't know, self-loathing or whatever. We just don't allow ourselves to use it. But we're happy to sell that same stuff to the other places in the world so they can use it. It's just boggles the mind what we're doing here. And, unfortunately, if we just keep doing the same dumb things, it's a definition of insanity. We're just going to keep getting the same bad results. And there just doesn't seem to be any appetite. I mean, if the pandemic couldn't kill high immigration, it's actually turbocharged it. What will? You know what I mean? It's just crazy. Like, we've had so many opportunities over so long to get the policy, to adjust the policy settings to, trim the sails, if you want to say, to use a phrase. But we haven't bothered to do it. And in fact, we've doubled down on the things that make the situation worse and make us worse off. The government's policy seems to be just to keep doubling down. And we saw it with the Centre for Population's latest forecast. We've destroyed it. We've degraded the country from 20 years of excessive immigration-driven population growth. Well, hey, what's 20 years? Let's do 40, another 40. That's basically what they've done. And it just boggles the mind. Like our government, our policymakers could run things so much differently. And all they'd have to do is just have a simple rule that they follow, which is, does this make incumbent residents better off or worse off? If it makes them worse off, don't do it. That should be the simple, their North Star. Maximising living standards, maximising welfare of their actual constituents who vote for them. Right? But unfortunately, our politicians don't. Most of their policies are to the detriment of the general population or the general voter base. It's just crazy. But part of it's because of the political system we've got. I mean, it's like, let's face it. It's the uniparty, right? Coalition or Labor. Like, it's really, Pepsi or Coke, right? Doesn't make a whole lot of difference. And the Greens are even worse. So what choice do we have? Like, the system we've got of voting over here just makes it incredibly hard for any kind of minor party to get a look in at all.
Mm. Well,
so unfortunately, we're just stuck in hell.
It is interesting because, of course, One Nation's polls are rising and people, I think, are getting more disenchanted with the uni party, and we'll see how that plays out. So I think, we've laid out some of the policy settings that could be done. I would add one more to the list, AUKUS. AUKUS, to my mind, is an absolutely disastrous policy because we are paying massive amounts of money that we can't afford to the US for submarines we may never get. And
to be honest with you, I don't know what your view is, but having watched the goings on in Ukraine, etc., the old-fashioned war,
the order's changed.
Yeah, it's changed. I mean, it's all drones and things like, it's all unmanned stuff.
Correct.
Right?
Yes.
So absolutely. If anything, Australia should be spending its money on an absolute squadron, like a massive squadron of drones.
Yeah.
So if the worst did happen, we had a, warship off our coast or whatever, with its guns, we can send out swarm them with unmanned drones. Like, obviously cheap to produce. You could have thousands of them. And we should probably do the same with some sort of unmanned submarines or something. I don't know. But I'm obviously not a military expert, but logically, having watched enough YouTube videos, etc., on what's happened in the war in Ukraine, it's totally turned the old order upside down.
Yeah.
Right. It's all drone warfare now. So why are we investing in an old thing like a submarine that requires, a massive crew and life support systems, and it's going to cost however many billions of dollars to build, and et cetera, when we should be investing in, unmanned small remote controlled submarines and things like that, which don't require life support systems, et cetera.
And there's no guarantee of delivery, of course. So, we're paying all this money across.
Yeah.
So, maybe in 20 years, maybe not. Leith, we've come to the end of the show because we've run out of time. But I want to say thank you very, very much for sharing your thoughts this evening so potently. I really appreciate it. If people want to find out more about you, where's the best place for them to go?
Yeah, so they can go to the mothership is macrobusiness.com.au. That's where I basically write every single day. The majority of my work and research and thought pieces and economic data, etc., gets published there. So that's the mothership. I've also got a YouTube channel, which is just, if you type my name, Leith van Onselen, in YouTube, you'll find it. It's at Leithvo. I think I've got about 23,000 subscribers now. It's doing all right now. But that's basically mostly just interviews, podcasts, that sort of thing. I do hope to start trying to do some actual content in the next few weeks. I want to start doing some, weekly economic wraps and things like that with just the latest data and stuff like that. I just need to, find a little bit more time and get better at it, which obviously I'm not a pro like you, Martin, unfortunately, at this sort of stuff. I've got to learn the ropes. It takes a while to learn this stuff.
Yeah,
so,
one step
I just
at a
haven't had
time.
much time to sit down and do it. It's like anything, like as the Nike logo is, just do it. I need to just do it because I'll get better at it by doing it. But if I don't do it, I'm never going to improve.
Well, I think it's really, really important. And I'm pleased that people like you and Tarek and some others are engaging on this channel. And then you're building your own channel as well, because we have to get some of this stuff out beyond the mainstream media, beyond the the very myopic views that are being reported. And I agree with you, there are some risks in terms of the most recent legislation that came through in terms of hate speech, but these are critical issues for ordinary Australians to understand. So if we can help effectively grow people's understanding and confidence in the issues so that they actually know how to point them out and pull for change, then to my mind, that's great, because there is an alternative future for Australia, which is much brighter and much more attractive for people than the current one that I see. And that's why this is a very important conversation, Leith. And as always, thank you so much. Look forward to having you back on the channel maybe in a month or so. So thanks, take care. I'll put the latest links below, and I'll drop you off now and finish the show. Thank you.
Yeah, thanks. Thanks, everyone.
So there you go. Well, very potent conversation there, and I hope you found it interesting and informative. Next week, we've got Damien Klassen on. We're going to talk about the latest in the markets. We'll talk about gold, silver, and some of the other things going on at the moment, as well as the latest shenanigans, which should be fun. The dogs are still here. Well, one dog. The other dog's just around the corner, so slightly out of shot. But time for their walks and lunch, so that's my next task. And I want to say thank you for spending some time with us this evening. Please like and subscribe on the channel. Really appreciate your support. And we'll see you next week for a live show. Check out the recorded shows. They go out every night. This is Martin North from Digital Finance Analytics signing off. Take care. See you next time.